In China's cities, cash is vanishing, replaced by the silent revolution of WeChat Pay and Alipay. These super apps have rewired how over 1 billion people interact with money, making payments as easy as scanning a QR code. This isn't just about convenience, it's about redefining money and China's role in its future. While the West obsesses over volatile cryptocurrencies, China has built a stable, centralized digital finance system. Some experts now call the digital Yuan balances in these apps de facto stablecoins, digital cash, always worth 1 yuan. Has China, almost by accident, created the world's most successful stablecoin system? As we explore, we'll see how this domestic payment revolution could challenge the US dollar's dominance and reshape global finance. The story of WeChat Pay and Alipay is a preview of money's possible future, one that affects us all. To truly grasp the landscape of China's digital finance revolution, it's important to first understand what a stablecoin is and why it matters. Unlike cryptocurrencies such as Bitcoin or Ethereum, which are notorious for their dramatic price swings and unpredictable value, stablecoins are a special type of digital currency. They're designed to maintain a steady value by being pegged to stable assets, most commonly the US dollar. For every stablecoin that's created, there's supposed to be an actual dollar or an equivalent asset held safely in reserve. This backing is what gives stablecoins their reliability, making them practical for everyday transactions, from buying coffee to sending money abroad. In essence, stablecoins serve as a bridge between the old world of traditional finance and the new digital economy. They allow for fast, borderless payments that don't suffer from the wild price swings of other cryptocurrencies. There are several types of stablecoins: fiat-backed like USDC, crypto-backed and algorithmic varieties. But so far, only those backed by real-world assets like the US dollar have managed to deliver true price stability and widespread trust. The main purpose of stablecoins is to act as digital cash, something stable, trustworthy, and easy to use for both payments and savings. They're especially useful in countries where local currencies are unstable, or where access to traditional banking is limited. This unique combination of stability and digital convenience is what makes stablecoins so powerful and popular in the crypto world, especially for traders and everyday users alike. That's also why people often compare stablecoins to China's payment giants, like Alipay and WeChat Pay. Both offer seamless digital ways to move money and make purchases. Both systems provide a stable digital representation of national currency, making digital payments accessible and efficient for millions. But in China, digital payments are even more deeply woven into the fabric of daily life, shaping how people shop, travel, and interact every single day. In China, WeChat Pay and Alipay are more than just payment apps. They're super apps deeply embedded in the fabric of daily life. These platforms have revolutionized how people interact with money, making transactions effortless and almost invisible. Whether you're grabbing a coffee, hailing a taxi, or splitting a bill with friends, these apps are always at your fingertips, seamlessly integrated into every aspect of urban living. Alipay, which originated from the e-commerce giant Alibaba, began as a simple escrow service to build trust in online shopping. Over time, it exploded into a financial powerhouse, offering a vast ecosystem of services that go far beyond payments. Today, Alipay is a one-stop shop for everything from shopping and bill payments to booking travel and accessing financial products. WeChat Pay, on the other hand, is seamlessly built into China's most popular messaging app, WeChat. This integration made digital payments instant, social, and universal. Sending money to a friend is as easy as sending a text, and paying at a store is just a quick scan away. Together, WeChat Pay and Alipay process trillions of dollars in transactions every year, serving nearly every digitally connected citizen in China. Their reach is so extensive that it's rare to find a business or individual who doesn't use at least one of these platforms. Users simply link their bank accounts once, and from then on, they can pay for virtually anything: groceries, rent, utility bills, or even street food, just by scanning a QR code. The process is fast, secure, and eliminates the need to carry cash or cards. But these apps are more than just digital wallets. They offer a full suite of financial services. Users can invest in mutual funds, buy insurance, apply for loans, and manage their wealth, all within a single app. This has made sophisticated financial tools accessible to millions who might never have used them otherwise. In fact, cash has become a rare sight in Chinese cities. Even street performers and small vendors display QR codes for tips and payments, making cashless transactions the norm rather than the exception. This rapid adoption of mobile payments allowed China to leapfrog the credit card era entirely, creating a cashless, data-rich financial system that's years ahead of many other countries. The digital balances stored in these wallets have effectively become China's de facto stablecoins, providing a stable, government-backed alternative to cash that's accepted everywhere. Payments are stable, seamless, and incredibly fast, making these apps the default way to move money, whether you're paying a business or sending funds to a friend. The transformation is so complete that it's hard to imagine anywhere else in the world adopting mobile payments on such a massive scale. For visitors, the ubiquity of QR codes and the absence of cash can be a real culture shock, highlighting just how far China's digital economy has come. Why call WeChat Pay and Alipay balances de facto stablecoins? Because they function just like them. When you top up your wallet, your Yuan becomes a digital balance, always worth exactly 1 Yuan. No volatility, no surprises, just digital cash, pegged one to the real currency. Unlike Western stablecoins on public blockchains, these balances exist in private, centralized systems run by Tencent and Alibaba. Transactions are lightning fast, processed on company servers, not public ledgers. Chinese regulators now require all customer funds to be held in non-interest-bearing accounts at the central bank. That means every digital yuan is fully backed by state reserves, arguably the most secure stablecoin model in existence. Over 1 billion people use this system daily with complete stability and government oversight. It's digital cash for the masses, operating within a tightly managed walled garden. Stablecoin in function, if not in name. When we compare China's digital payments ecosystem to the world of Western stablecoins, the differences are striking and reveal two very different visions for the future of money. In the West, stablecoins like USDC operate on public blockchains, designed to be open, borderless, and accessible to anyone with an internet connection. Their goal is to decentralize finance, giving people more control and transparency over their money, and enabling global transactions without traditional banks. Meanwhile, in China, digital wallets like WeChat Pay and Alipay are highly centralized and private, with every transaction closely monitored and regulated by the government. These platforms are deeply integrated into daily life, making cash almost obsolete in many cities. In the West, regulators are still figuring out how to oversee stablecoins, leading to ongoing debates and uncertainty for businesses and users alike. The rules are still being written, and the future remains unclear. By contrast, China's approach is strict and straightforward. Customer funds must be held at the central bank, and the government sets clear rules, ensuring tight control over the entire system. In the West, stablecoins are mostly used for crypto trading, DeFi protocols, and as a bridge between different cryptocurrencies. They're rarely used for everyday purchases like groceries or rent. In China, digital wallets are truly universal. People use them for everything: buying lunch, paying rent, splitting bills with friends, or even donating to charity. Nearly everyone, from students to seniors, relies on these apps for daily life. Western stablecoins help reinforce the US dollar's dominance in global finance, making it easier to move dollars across borders. In China, the focus is on boosting the yuan's role and making domestic payments faster and more efficient. But as Chinese payment platforms expand overseas, they could start to project the yuan's influence far beyond China's borders, challenging the dollar's supremacy. This isn't just a technical race, it's a battle of philosophies. Will the future of money be shaped by open, decentralized networks, or by efficient, state-controlled systems? The world is watching to see which model will win out: the freedom and innovation of decentralization, or the stability and control of centralization. Whichever path prevails, the outcome could fundamentally redefine how global finance works for generations to come. China's government has walked a fine line, encouraging fintech innovation then reining it in. As WeChat Pay and Alipay grew, regulators forced all customer funds into central bank custody, stripping tech giants of control. The state cracked down on monopolistic practices and asserted its authority over digital finance. Enter the digital yuan, or ECNY, a central bank digital currency, a direct claim on the state, not a tech company. The ECNY is designed to coexist with private apps, but gives the government ultimate control and real-time economic insight. It offers managed anonymity, privacy for small transactions, but traceability for the state. With the digital yuan, China ensures that as cash disappears, the state, not tech giants, remains in charge of money. It's the ultimate backstop for a cashless society. China wants the yuan to rival the dollar globally, and its payment apps are a new tool for this ambition. WeChat Pay and Alipay are expanding abroad, first serving Chinese tourists, then building payment rails in foreign markets. When a tourist pays with Alipay in Paris, the merchant gets euros, but the transaction runs on Chinese tech. The next step, getting non-Chinese users and merchants to adopt these platforms, especially in Belt and Road countries. In places with weak financial infrastructure, Chinese fintech offers a turnkey solution. As more trade happens through these apps, demand for yuan could rise. It's a slow, tech-driven approach to currency internationalization, bypassing traditional banking and SWIFT. The payment app becomes a Trojan horse for the yuan's global reach. It's a subtle but potentially transformative strategy. China's digital finance model faces big hurdles, especially abroad. Data privacy and state surveillance concerns make non-Chinese users wary of adopting WeChat Pay or Alipay. Western governments see Chinese tech as a strategic threat, likely blocking expansion in their markets. The US is accelerating its own digital currency efforts, pushing for regulated dollar stablecoins and exploring a digital dollar. Europe is doing the same with the digital euro. The debate isn't just about technology, it's about values, privacy, openness, and control. Will the future of money be decentralized, state-run, or a hybrid? The outcome will shape not just finance, but global power. The digital currency race is on. We're at a crossroads in the history of money. China's model, efficient, state-backed, and cashless, has achieved mass adoption and could project the yuan's influence worldwide. The West's approach, open, decentralized but chaotic, reinforces the dollar's dominance but faces regulatory and technical challenges. The future may not be winner-take-all. Different systems could coexist, creating digital currency blocks. The choices made now will shape trade, privacy, and sovereignty for decades. This isn't just a tech story. It's about how we earn, spend, and save. Will our money live in walled gardens, on open networks, or in central bank accounts? The revolution that began with a QR code in China is now a global contest for the future of value. The final chapter is still unwritten, and its outcome will define the world to come.